Hello friends, welcome to my channel. As you all are aware, CEO is the most important person who's directly responsible for the success or failure of a company. As an investor, it's really important for us to pay attention to the CEO before we pull the trigger to invest in that company. There are a few qualities in a CEO that we really need to watch out for. Here in the channel, we decode the minds of CEOs to make wise investment decisions. That being said, let's get started.
Kind of outline the pace of innovation. The interesting thing that we've kind of noticed, and this applies to the vehicle analogy you brought up, but also with sequencing, it's that it's a more nuanced way to look at it when you study the cost decline of sequencing as a function of how much sequencing we're doing, right? Almost looking at it like a learning curve, which the way we model that is with Wright's law. So effectively what happens is for every cumulative doubling of sequencing that we do, there's a finite drop in that cost, right? And so on a time series, it ends up being something like 40 or 50% per year. But it's actually kind of a delicate interplay that I think you just brought it up, which is, sure, Illumina can innovate and put a new piece of hardware out on the market, but then the tables kind of turn over to you guys or to companies that are saying, okay, well, actually, let's zoom out a little bit and look at the entire workflow and see how we can innovate from a point of automating sample prep and accessioning and building more on the software layer that happens downstream from the sequencing, right? And so you have to be able to contend with all of that. So there's almost like an interesting ebb and flow. It's not so much that Illumina can just push these sequencers out and then everybody can do it. Because if everyone could just buy a sequencer,
believe me, many have tried.
There would be more.
No, I think that's a very important perspective because look, me being one of the, many of us, the Human Genome Project as it started up, as it got going, as it kind of had the first results coming out, and then it's kind of ended up, early 2002, 2003. A ton of frustration that, well, great. So now what is happening? Not much was changing a whole lot. And your constant refrain kind of, I'd say in the, late 2000s, 2010 was, well, that's because, you can generate all this data, but no one knows what to do with it. And that I think is a summary point of exactly what this company, NVTA, has tried to solve is like, okay, well, actually, clinicians know what to do with the information. What you have to do is take the 3 gigabases of genomic data and filter down into the format that the clinicians are used to acting on that people can actually understand. And turns out that's hard. Turns out that is incredibly difficult to do across all these disease areas. While previously, and still to this day, most of the incumbents in the space rely on intricately complex handoff of information and expertise between people in a pretty much a non-scalable, high-cost fashion. You can apply technology and build a text. What we've done is build a software stack underneath that question to take all of the variants come off, interpret them, format the results into a report that the clinicians are used to, can act on, that patients can understand. And that's hard. It's costly. It's taken us 10 years to get to where we are today. And even today with if you take our testing average price of around $500, our COGS are down around $220, $230 around there. 40% of that is still that variant interpretation and reporting. Mm-hmm. So it's a good window into, well, where are the bottlenecks? And you're right. There's again, I often think of the sequencing as kind of like microprocessor. And then our particular application space is medical genetics. There are others, infectious disease, environmental sampling, defense, I suppose, right? Agriculture, all these application industries that will benefit from the rampant decline in sequencing costs. They've all got to solve their own problems. And ours was particularly the variant interpretation and reporting. Now there's an interplay, right? This is where, again, extending the analogy, in the 60s, there were, 200 fair children, right? And they were all building out capabilities in microprocessing. Ultimately, one won out, Intel. And Intel, you could argue, and I mean, it's always difficult looking back, revisionist history and everything, but it's pretty clear that by a myopic, almost maniacal focus on reducing the cost of compute, that's where Intel A, one, in their sector of the industry, and then B, enabled all of these other application spaces. So if you look at sequencing, it's kind of the same thing. When next generation sequencing kind of started hitting, call it 15 years ago, there were 5 or 6 players. They were competing ferociously, driving down the cost together. And the sequencing curve actually was moving faster than Moore's law. And by the way, as that begun is when people like myself started thinking like, hey, this is going to change things. And that's why we started the company. That's why we started NVTA. Hey, sooner than later, it's going to be as expensive to sequence the entire genome as it is to sequence a single gene today. That's going to change things. Let's build a technology layer on top of that to really change healthcare.
Sean who is the CEO of INVITAE, he's willing to acknowledge and understand the challenge. That I think is really, really important. If you acknowledge that this field that they are working is incredibly hard, it's incredibly challenging, and they are working towards finding a solution in terms of economically, to help to achieve the mission, and also to actually solve the problem of enabling widespread adoption of genetic testing for the betterment of the healthcare solution. So I really, really like that fact that he mentions and acknowledges, says that it's a hard problem they're going after. It's not a problem. It's not a path that a lot of other investors are willing, VCs are willing to support. And also he mentions that he's not afraid of a failure when pursuing a path that others are not willing to take. So that's one thing I felt is really, I really want to appreciate CEO for that. And the other one point I want to mention is he especially points out Illumina that he says that they're not very keen on taking the path that Illumina takes. The place where he differs is he wants to go after the massive opportunity that presents itself in the field of diagnostics. He doesn't want to, he doesn't want to take a path of short-term profits to maximize the reimbursements from insurance. And I feel that is really exceptional and really amazing. That shows that he's really adamant on adhering to the mission of the company, which is to disrupt the molecular genetic testing thing in the industry. And so I feel that's really a good thing. These are some of really important things. It gives you insights into what the CEO is really after, and he's not really chasing those short-term profits. And I really want to emphasize this fact. Actually, that's also my goal of a takeaway from this discussion, I would say. We also heard his analogy of how Intel became the winner in the microprocessor field, 50 to 40 years back, by obsessing, not just focusing, it's obsessing on reducing the cost. And Sean mentions this is the path he wants to take, and he sees that this is what the healthcare industry will turn to in the coming years. And so I really like this one as well. And these are a few points that we need to keep in mind. Some of the points that we need to think over to see if this vision of the CEO aligns with your vision before you invest in the company. And so this makes it super important. Everything else, like valuation of the company, let's say the revenue, the current revenue, the revenue growth rate, the EBITDA margin, the gross margins, all those things are important. But if you don't understand what the CEO is chasing after, what the CEO is his execution plans, it makes very little sense to actually put your money into the company. That's why I feel it's super, super important that we completely understand and comprehend what the CEO, his vision is, and how he sees the company 5 to 10 years in the future. so that your capital, your investment is in safe hands, and you know that you can trust this company, you can trust the CEO, and in this way, you can make a much better, wiser investment decision. Having said that, I would like to wrap this up. Really thank you for watching the video, spending your time. Drop your comments below. I would love to know what you think about this, the format, any suggestions, any feedbacks. I would love to know. Thank you so much. Have a wonderful day. Bye.